Okay, good evening, everybody. Hope everyone's okay. Hope everyone's well. And yes, I have hit the live stream button. Tuesday, I'm having to look at the date, the 9th of December. So, we're cracking on through the final month of 2025. And whilst I will save it till the end of the month, now is kind of the time we want to sort of be reflecting on where we've kind of gone through this year over the past 11, 12 months and what more we can kind of expect from it. And what I will say is over the last 7 days, Bitcoin's price has not really moved too much. We had that nice move up from 80,000, but we've been sitting in around 90K. I mean, I know we're up at nearly 94 at the moment, but we've been here before. Now 90K just as a nice average is where we are. And I suppose the question we really need to understand, you do need to do your Christmas shopping, is, realistically, what is the chance that we can get 100K plus in the next 20 odd days, 3 weeks or so? And so we're going to have a look at that. And I make no bones about it. I've probably been very consistent, and then say over the past 3 or 4 weeks. But I've started to really kind of question where we sit within the cycle. So I do want to talk bullish. I do want to talk bearish. I still haven't skin in the game. I haven't left the market. So that should kind of give you an indication of where I think I am. But I'm constantly questioning that. So we're going to have a look at both sides as to whether or not 100K is achievable and what that really means. We'll have a look at Bitcoin's price. We'll go into some charting. Not really too much news to really go on today. And so, we'll start from there. I do just want to start with one other thing first, if I can. I'll go to the main screen. So something happened today in Discord, and it's only just been brought to my attention, and Lewis and Simon have asked me to very quickly just talk about it, and more information will ultimately come out. But when you join RT, obviously there's the read me first, and in the first section there's a couple of things, do's and don'ts. One of them being not tolerating anyone using this group to populate another group, and no selling, etc. Unfortunately, something like that happened today, and so a member of the community has now been removed, which is a shame because they were a good member of the group. As I say, more information is going to come out on that, and it's not necessarily a telling off to anyone else in the group. It's just to be mindful that we are in a paid group. It's not our group, it's someone else's, and we just got to be careful about how we interact within that. So please refresh if you need to on what's gone on here, what the do's and don'ts have been allowed to be within the group. And hopefully we can kind of all move on from there. As I say, I'm sure it was a bit of a mistake. I've not spoken with the individual about it. And as I said, they've already been removed. So that's a decision that's made between Lewis and Simon. But ultimately, these are the things that we sign up for. So we just got to bear that in mind. Anyway, sorry that we had to start on that. More information will come, and I'm sure on Thursday at the Trading Pub, we'll talk about it in a lot more detail there. Let's have a look at Bitcoin's price, 3-day time frame, and what can we see that Bitcoin ultimately has gone and done. And you know what? I actually quite like, from a 3-day point of view, today's candle, that final candle we can see at the moment, it's the start of a 3-day candle. So there's plenty of time for that one to go. But we've had these lines drawn on here for a while, and 86 is where we bounced from. We've seen some previous history within that one. So looking good, strong move there. We kind of consolidated it within that one and that 93K. And then today we have peaked our head above the 93,000. Unfortunately, we still got 48 hours or so for this candle to close to try and stick the landing, but it has been a nice move today. Potentially, we've got some volatility in the market with FOMC tomorrow. But as we kind of see things at the moment, not only are we climbing higher, but in doing, even when we retrace, we're not forming lower lows. So we're starting to build a picture on smaller timeframes, daily and lower, of actually breaking that downtrend that we've had, which is fine. I don't mind the slow and steady route up. As long as we can keep it healthy with market structure on the way up, that's fine. And as I say, if we keep on building this picture of actually creating higher highs and higher lows, then that's what we want to see after a correction like this. And as I said on Friday, if we can't have a V-shaped reversal, I'd rather then just have a steady build out of this one. And just big picture, 93K, big level for us. And we're starting to look like we're clearing that one. We can't get too carried away because 6 days ago, we were at this same point and we ultimately ended up wicking back down. But we can only go on what we can see currently on the charts at the moment. As I say, looking for like a fairly decent structure in how that's being built there. terms of Bitcoin dominance, I'm really kind of sort of not really seeing anything too clearly with Bitcoin dominance at the moment. We've had that pullback. It's kind of started to fall down again. And we're just ranging at this sort of 59%. We either need to ultimately shit or get off the pot. We either need to break the 60 or we need to break the 59. And that can kind of give us a direction. But if you look on the right-hand side, the altcoins that I do follow, the vast majority of them sort of 5-6% good move. But if Bitcoin does a 3% move, because it's got such a big market cap, it still holds its own. And Bitcoin dominance, it's only down, 0.2% today, despite, as you'll see in a moment, how far altcoins have actually been able to move today. So not really seeing too much. We'll keep on viewing it. We'll keep it on the main 4 charts for now. But until it actually gives us some direction, we are ultimately just ranging. We go into total 2, so everything but Bitcoin. And that line, that 1.25 trillion, we've gotten over it. And as I say, this is a candle that's only 20 hours old, and we've managed to clear it, significantly as well. I mean, from where we were today, we've effectively gone 60, well, at the peaks, we've gone 80 billion across the altcoin market, which it is a lot. It may not sound a lot because we're talking about trillions in other assets, but that's a big move for altcoins there. And Ethereum at 7% gain on the day is carrying a lot of that heavy lifting there. So, yeah, it's looking promising. We've kind of bottomed, and it is similar to Bitcoin's in terms of we are making higher highs and higher lows. Structure is kind of looking there. We've got some work to do. Obviously, I don't have the line on, but I should. If we can keep the momentum going, I don't know, 3-day time frame, it's hard to pick it. I'd be looking somewhere between, let's say, sort of 138 and 136. So kind of within there, just looking at this kind of action here, and then where that's happened, and then ultimately, I suppose, that wick there as well. But that kind of next area of interest is where alts need to go. And even a move from where we are now to that level, it's going to help altcoins. I'm not saying it's going to affect Bitcoin dominance, because Bitcoin could also go up at the same time, but that's certainly going to help lift altcoins. And I'm not talking about alpha, because as you know, I'm pretty much ill-informed on that. Close that one down, and we'll go into BitTensor. And even BitTensor, we've had that move down, and then again, yesterday we were threatening it. Today we finally done it. This yellow line here, we've been able to break through. We wicked all the way up, and we'll see later on, to the Gandalf line, and we have now rejected from that one. So I think for those of you that have kind of sidestepped, obviously appreciate, depending on the levels that you've taken. Maybe it's a little bit nervy as where we're going, but unfortunately we haven't had that confirmation that we are making that move up. And if I just get rid of this yellow line, I know I'm going to go into it in more detail in a moment. If I can, why can't I? Oh, that's fine. Sorry there. If I get rid of this, and if I just put a horizontal line at the Gandalf line, if you will, you can kind of just see all this kind of price action. It's such a powerful level, not to mention the fact the 800 EMA is in and around that level now as well. Plenty to get through. So the fact that we came up to it, we started to eject from it, really need to BitTensor to ultimately turn that around. There's been plenty of discussion in the group about, the halving and what that effect may be. I didn't even know when it was, but apparently someone's told me it's on Sunday. So yeah, maybe we're getting a little bit of a run up, buy the rumor, sell the news. We kind of see that with Bitcoin. But for me, I'm probably going to suggest that it's ultimately a non-event. The halving of BitTensor won't really impact the price of BitTensor, in my opinion, and rather it will just be dictated by wider market environments instead. Anyway, as I say, we'll come back to that a little bit later on. For those that were on the call on Friday, you've seen this, but for those that weren't, all I've done is I've just overlaid the Wall Street cheat sheet market psychology, but instead of using that, faded chart, I've just overlaid it onto Bitcoin's price action from the 2017 bull market. The price action itself is irrelevant. It's just a visual cue to have a look at stages that we've kind of gone through. And for me, this is something right now that I cannot unsee, in terms of I'm constantly questioning where we are, because we're actually at a stage now where where we're getting to the point of we're near a market top. And when we get here, it's so uncertain as to which side of that peak we're on. And there's an argument right now to be had about both of those. Are we in, a bit of a pullback before one final move up, which is what everyone hopes that we are, myself included. And so we find ourselves sort of here, trying to climb back out of that. Or have we actually seen a peak, 126,000, a significant correction down to 80,000 before now we're starting to see a little bit of a build back up? And are we actually in a complacency phase and we're actually just going to climb out, but we're not going to make a new all-time high before rolling over? And I don't raise this at the beginning of this call to give you a definitive answer on where I think that is. We're going to have this call to have that conversation. But I do think that this is something that we should all be considering, because we never know when the top is going to be. And after we've had, I'm going to say 3 years of up, the time maybe is less and less irrelevant, but the gains that we've seen over the period of this bull market so far, in terms of Bitcoin from 15,000 all the way up to 126,000, we're the best part of an 8 and a little bit X there, which is pretty darn good for Bitcoin. Not saying we can't go higher, but we have got to accept that had you have been in that market for that entire period, you couldn't say that that wasn't a good, healthy return over a 3-year period. And so the question really is now, where do we sit with on this? And so I make no excuse about it. I want to talk about this more. I want to try and encourage conversation about it, and just maybe trying to get you thinking. I'll talk about that point when we come back to it later on, actually. So what is the one thing that people are excited about this week? Of course, it's FOMC tomorrow. Now, it seems to me like it is a foregone conclusion. We're almost at 90% that what we're actually going to see is another 25 basis point rate cut, which on a whole is a positive for the market. We're bringing the price of borrowing down. We're encouraging more risk on assets, which cryptocurrency forms part of, to ultimately that should help lift markets higher. And tomorrow will be an interesting day. It'll be incredibly volatile. There'll be people questioning whether or not it's already priced in, because it's been 90% for God knows how long. Most people know that this is going to happen. There's going to be questions thrown out there about whether or not this is Jerome Powell's final one, and that Trump's going to be able to replace him at the beginning of next year. We've seen comments from Trump today and yesterday saying that the US economy is as strong as it's ever been. We need to see significant rate cuts immediately. Nothing that he hasn't been saying for a while. And so there's certainly a very positive narrative out there for that to change. But I can see the plus side of this, because what people are basically saying is rate cuts are coming down. We finished quantitative tightening. That's it. The money print is on, and off we go to the market. Everything's going to flood into risk-on assets, and within a matter of weeks, we're going to start to see that flow into the markets. And this is a chart that I've kind of used in a few cuddle talks and everything else. It's a shame because some of the data I want to use doesn't go back far enough, but we're actually looking at the S&P at the moment. We are on the linear chart. The green line is basically the Federal Reserve's balance sheets. And if we're going up, then it's quantitative easing. And if we're going down, it's pretty much quantitative tightening. And then the blue line is the interest rates for the United States. And so if we just hide the balance sheet one for a moment, everyone sort of assumes, look, as soon as interest rates come down, we start to see that markets go up. So you can't see this one because my head's in the way. But in 2000 dot-com crash, sort of interest rates started coming down. We found sort of a bottom. Markets went back up. Got to the 2008 crash. Interest rates started coming back down. Found the bottom. Markets gone up. Similarly, the lead up to 2020 and COVID, market rates come back down. Interest rates come crashing down. Market goes up. And then similarly, we've sort of had a similar effect here, although quite in, what we haven't seen is that sort of sharp drop off just yet. But the point I try and make to as many people as I can is that just because interest rates are coming down doesn't mean that quantitative easing is starting. Matter of fact, quantitative easing, it's almost like a last resort, really. So what you need for quantitative easing is already very low interest rates. And 4%, 3.5%, whatever it's going to be, is not considered a very low interest rate. So just because interest rates are coming down and just because quantitative tightening has stopped doesn't mean that quantitative easing is going to start. What we need is we need to get those interest rates down sharply, like Trump is pushing, probably because he does want to turn the money printers on. But you can't really turn the money printers on whilst your interest rates are still high. You want to bring those down to encourage people to sort of, take out the loans, put that into risk-on markets, etc. You start trying to do that whilst you've got interest rates as high as they are. I'm not saying it's not going to have an effect, but it's not as effective. And quantitative easing ultimately is really used when you can't take interest rates any lower, but you still need to do something else to kickstart the economy. And if you have a look at sort of this chart, and this is the point that I've tried to make a couple of times, sadly, the data doesn't go back to behind my head for this one here, which is annoying because I'd like to have sort of pulled it all the way back to where we were after the dot-com bubble. But we can have a look in terms of 2008. So interest rates started coming down 2007, but it wasn't until interest rates got really down to 0.25% that we actually started to see the market turn around. And even then, we're on a monthly time frame here. It took a couple of candles because just because you put the quantitative easing on doesn't mean the money is available straight away. It kind of has to filter all the way down. And so there is that delay to it. So ultimately, what we end up having is we have a crash, a recession, whatever, sharp drop in interest rates, a quick, well, in 2007's case, not a quick recession, but a recession. We get low enough interest rates, money printers come on. Few months later, we start to work our way through. Very similar story in 2020, although what we actually had there was a very quick drop in interest rates just because we had to. We did go into a globally recognized recession, but only for a matter of months because the level of the QE was so intense, and they are just going to get more and more intense. Like down here doesn't look like a very steep line because, that was all that was needed back then. But now we're in the realms of sort of $38 trillion worth of debt in the United States at the moment and going up. We need much bigger cash injections. But to get back to the point, it was a sharp drop in rates. QE started, but look, it still took a couple more months before the money printer started to kick in. So yes, we're all excited about interest rates coming down. But for me, people, and I read it mainly on crypto Twitter, so a very reliable source, they're kind of just missing that step in the middle. All they see is, yes, that means that we're going to be going up again. But there seems to be, historically, actually a period in which we see the markets correct themselves. And from that correction, we can then build out from it. And as you can see with the S&P here, we haven't seen that correction. We saw a bit of a correction with the tariffs, but again, very quickly bought back up. A little bit of a correction last month, but again, very quickly bought back up. And we're about to hit new all-time highs. So it doesn't feel like we've had that correction yet. And some of the economic data, without us going through it, but the employment data, what we know anyway, seems to still be quite hot. Inflation's not coming down as quick as they're saying. I know trueflation maybe is a little bit different. But it just seems that whatever they're doing right now, slow and steady, because you've got to remember the Federal Reserve, they don't want to bring down the interest rates at a very sharp rate because they know what that causes. They're still aiming for that soft landing. They're still aiming for just a couple of rate cuts. And we do think we're going to see rate cuts over the next couple of occasions. So after tomorrow's, we've got one the end of January. Again, actually, it would be, at the moment, nearly 70% to keep it as it was, assuming we get that rate cut tomorrow. And then we wouldn't have one till the middle of March. And we're starting to see it starting to spread out a little bit there. But it's not like we're seeing back-to-back rate cuts. Now, this could all change with a new chairman of the Fed. But again, I don't want to necessarily speculate on that one. So I do think tomorrow will give us some localized volatility. And I actually do think it will give us a little bit of kick in the markets. The issue, I suppose, also, and I was trying to find a chart, which is why I was saying I'm running 1 minute late, is, let's get rid of this and this. And bin that one, and bin that one. And if we just add Bitcoin on, is the disconnect, And I tried to talk about this again on sort of Friday, and I was looking for a chart that gave the percentage, but ultimately you're just going to have to use your eyes. That, the S&P recently has continued to go up. It's a risk on asset. And yet for some reason, Bitcoin and crypto is the only risk on asset that has been stalling. And so that jaw is just widening and widening. Now, I feel that actually that's a bit like an elastic string. And if we keep on having risk on assets, the upside potential of crypto or Bitcoin, and then crypto by default, but the upside potential of Bitcoin will become appealing again. And I believe we will see a sharp move towards that. But it's just, again, about balancing that timing as to that versus interest rates, market corrections, blah, 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 etc. But there is a yawning gap at the moment between these two. And because of that, it's a bit of uncertain times for Bitcoin, in that how are we having such a strong disconnect from the rest of risk on assets. And again, things like uncertainty around economic data when the government was shut down, uncertainty around, well, actually, no, that's not true, because the S&P's climbed. Forget what I was about to say there. So, okay, I'll just ignore me that one, and we'll move back on. I was trying to do two different points at the same time, and they weren't quite wrapping up together. One of the next things that, people have often moved into talking about is seasonality, the Santa rally. And the Santa rally is a genuine thing. We'll talk about it in a moment. And I suppose when I'm sort of talking about what factors can help us lead towards 100K this side of Christmas, Santa rally, it's possible that could be something. Going back, sorry, this was the point I was trying to make. Tomorrow, with the announcement of a rate cut, assuming we get there, that initial shock of volatility. Now I need the Bitcoin chart. Sorry. Could be something that actually sees. I mean, ultimately, we've only got about 8% to climb to get back to that 100K. In terms of, Bitcoin's done nearly 4% today. So it could just be a couple of days worth of volatility climbing up to get into that. It's actually completely possible that we achieve that. So from a short-term point of view, something like that rate cut could have that effect. Guys, I am seeing some of the comments there. I will get around to those. But moving into that seasonality, again, people talk about the Santa rally, and it is a thing. The one caveat I'm sort of kind of holding at the moment, I suppose, is we've been talking about seasonality for the last 2 months, and October didn't really do its thing for us. November certainly didn't do its thing for us, looking on the Bitcoin monthly returns at the moment. And so what really ultimately can Bitcoin provide for us? Now, in terms of the Santa rally is kind of established from an S&P traditional market kind of thing. And effectively, there's, the rationale behind it, whether or not it's, traders needing to make good deals to achieve end-of-term bonuses or whatever, it doesn't necessarily matter. But the Santa rally is effectively the last 5 or 6 trading days of December. We usually see a positive kick within the markets. And I've got S&P 500 index seasonality grid up at the moment. This is detailing things over the last 20 years. And you can kind of see in December here, typically we're seeing on average about a 0.7% return in the month of December, and that happening 70% of the time. And that's why people get this season. But, for the S&P, 1%, pretty incredible. And for the fact that it actually happens 70% of the time, absolutely fantastic. There are a couple of months that do slightly better, certainly in around April and May, that sell in May, go away type mentality. But this one is a very positive return. I think this is kind of showing exactly the same thing. Yeah, okay, that's fine there. But the issue with that is, as I said, it is an S&P factor, which has on occasion worked for Bitcoin. But if you actually have a look at the monthly returns, you have a look at that final column in December, and you can kind of see, I mean, when you start off 2013, 14, 2 particularly bad months, we get into the start of the bull market, 15, 16, and 17. 17 was the blow off top, if you remember. Very positive months there. Strong correlation with the Santa rally. We move into 18 and 19, bear markets. 19, we're just about getting into the concerns about COVID as well. We see some negativity. 2020, massive returns for Bitcoin. Bitcoin moving from 20K to 40K in 6 weeks, seeing around about 40% return just in the month of December alone. And then 2021, a peak's already been in. We topped in November, if you remember. So we actually lost nearly 20%. 2022, climbing out that bear market, we were still down 23, we see some gains. 24, after the Trump rally, we see some, I would say, some flattishness, but ultimately down as a red month. And so this month so far, 9 days into it, we're seeing around about a 3.5% gain. And the point I'm trying to make with that is actually it's a lot more hit and miss. One, we don't have the data set. We've only got 15, well, in this 13 years worth of data. And of that, we're seeing 50% of it in drawdowns. And when we actually see sort of the average and the median, they're both pretty low compared to other months. And so whilst we have seen seasonality, we have seen the Santa Valley have an impact on S&P and other traditional markets, it's not as guaranteed a thing. We're not looking at 70% of the time. We're kind of looking at 50%, maybe ever so slightly below 50, sort of 45% of the time, seeing those returns. And even those returns, for what we normally expect within Bitcoin, they're not exactly the best. Not to mention, unfortunately, that this comes in the last week, effectively, of December, the last trading week. Doesn't really count for Bitcoin. So we're open 24/7. But it is something that we just need to temper. But, we start getting a positive market reaction from the Federal Reserve rate cuts. We're assuming that's going to happen tomorrow. And you'll be amazed at how quickly sentiment can change. And suddenly then we start to see markets doing well. And this is basically a confidence market, Bitcoin very much so. I mean, you can see why we're struggling at the moment. The last month we've been in extreme fear. But we can start getting over that, starting to see some psychological wins, 100K being one of those. You'll be amazed at how quickly we're going to move out from that one. So there are some outstanding external factors that can certainly help get us towards that. Sorry, I lost the YouTube screen. We'll have a look at where we see with some charting, and then we'll kind of take it from there. So 12-hour time frame at the moment. Most of you know what this looks like, but the horizontal lines are just a very long elongated fib that we've done, and the yellow boxes are liquidation heat map zones. And you can have a look at today's pump. So we had this liquidation heat zone round about 94,000 to 95,000. If any of you remember from last week, this was actually down at 93, and then we saw this pump up last Tuesday, Wednesday, to eat into that. And that's what left us with this residual bit. And lo and behold, today's very strong move up this afternoon, taking us to pretty much taking it out 94.5, and we're now starting to see it pull back from there. And again, brilliant kind of use of these, an example of why these are on my charts, because it just gives you that target. If you start to see a sudden movement in one direction where the market maker's looking to take it, they've taken it into there. Now, it wasn't a particularly big zone, and yeah, maybe you could be like, well, Harry, it didn't hit 95, so I don't know what you're talking about. But it's not there to give me a bang on to the dollar level we're going to turn around, but it's going to give me an area of interest that I may want to look to either sidestep, to either enter a short, a long, depending on which way it's going. And this one has worked very well there. Now, as we're looking to reset, ultimately, where can we go? In terms of the major levels that have been built up, what we are actually seeing is it's in and around that 82, 83,000. So to get down there, there's a few more things in our way, but we have to consider that there is an area down there for us to take. There's not too much. There is some around about 100K. It's not as bright as I thought it was going to be, but I suppose if we can keep building from this, then ultimately we can have a look at around that 100K, and it should be on my charts. But the ones at 111 and 118,000, I mean, they're a long way off. I think we've got to be realistic with that there. There's plenty of levels, support, resistance, fibs, EMAs, everything that's kind of standing in our way before we need to look at those. But the fact that we've taken it out pretty much the 95 level, kind of reset that there, see where it's going. When we look at the candles, you're going to see it today was a little bit overextended. We would expect some form of a pullback, and we'll see where that could possibly take us in a moment. In terms of some of the other levels, I don't know why it's gone in purple, but apologies there. What I've done is I've just put this on the daily, and I've just drawn some of these levels that we've talked about before. So that 83 level that was on the first chart, that 93 level, the 100K there, the 76 down at the bottom, should we need to get to it. I'm just trying to keep this a little bit simplistic because I want to go back to that point there that I'm quite happy with how this market is currently structuring itself. We are, we found a bottom, a sharp drop to that bottom. We all felt it, we all remember it. And then since then, this has been drawn on the 12-hour. So when it looks like, Harry, what you're doing, you're not sort of lining these up very well. And I'm sort of lining up very well there. Why can't I get that? There we go. I've just put it on the daily so you can see it a little bit better. So that wick here, it is a body on the 12-hour. But as you can kind of see, that move down, we've come back up. We went to 93, retested it, came back down. We actually wicked back down to 83, but body closing, starting to form some higher highs, some higher lows. Back up to 93, ever so slightly higher this time. Reject back down. We're suddenly starting to find this trend line. And basically between 93 and then this yellow trend line here, we are starting to perform with that market structure we like. And if you think about it, we had 1, 2, 3, 4, 5. It hasn't quite closed higher yet, so we can't call that one. But if this one does close higher, ultimately we've got to have that conversation that we've probably broken the downtrend, and we can kind of have a look at sort of where that goes. And if it has to be slow and steady, I've got no problem with that. But what I really need is a close above this, and then we just need to sit on this, okay? And then build up. And that's what I'd be wanting to ultimately see. Now, there are some other levels. We'll get into some of the nittier grittier in a bit. Don't worry. It's too basic for some of you. I can't remember if I did this. I mean, that on Friday, we were nowhere near this level. But that was a concern that actually we have this downward resistance level. And actually today we have gone and smacked into it. So we do need to break through with this. We're kind of running out of room to the right. And we start to reject from this, and we start to lose levels. We start to lose that 90k, or let's just say 89,000. We lose that with a close. We suddenly start to break that rising trend that we were sort of seeing. So there's definitely this to be aware of, but there's no shame in coming up, touching it, coming back and sort of breaking through. But we can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The last 10 times we've hit this line, unfortunately, we have rejected from it. So it does need something to really push us through with that one. In terms of other canaries, I can't really read this anymore. I can obviously read it, but in terms of sort of what BlackRock is doing, and we don't have today's data yet, they're net selling over the last 3 weeks. But there are days where they're still buying. And so it's not like we've seen 3 full weeks in a row, which we saw in and around the tariff times. I think we were 1 day off it. So there's some interest. It almost feels, tinfoil hat time now. It kind of feels like, manipulation, get that price down. People are just sort of dipping their toe back in. But I would have at least expected some more enthusiasm. Maybe today we'll actually see it with that sharp move up, what necessarily caused it, but it's kind of tepid. It is treading water, I suppose, and not, okay, these were end of November, some pretty healthy numbers there, but pretty much we're probably net even over the last 2 weeks with buys. So something to work on there. But as I pointed out, 22, that's what fear we've been in. We've been in extreme fear for a month. And I suppose that's the one concern I have. Because for those of you that have experienced a bull market, when you're here, you shouldn't have a month's long worth of fear. Yes, pullbacks are disappointing, but we don't have people talking about giving in. We don't have staying in the fear and greed index down in extreme fear for a month. It just isn't normally the character that we kind of find ourselves there. Now, yes, this market has arguably been built different this bull cycle than previous ones with the help from institutions and sort of what they provide. And I think people are just sort of, they see a drop from 120 to 80,000 and just think that's an absolute kick in the teeth. But, the reality of it is we're still at $93,000 per Bitcoin. I tell people who don't even understand what Bitcoin is, they cannot fathom that someone would pay, in their mind, $93,000 for a piece of thin air. But, it is still a considerable amount of money. And maybe we're just immaturing as a market. We just want our gains quicker. And so we are still down here on the left-hand side of this positive move up, but we just happen to be more emotional about it. But typically that level of fear, the level of sort of, annoyance at ourselves or others in terms of performance and how altcoins and our portfolios have been doing, is usually what you see down here in terms of, well, anxiety and sort of denial and panic and everything else. But it is unfortunately where we find ourselves. And there's a few, I think it'd be unfair not to talk about. So I know Havinder's actually posted a couple of these things in the trading section themselves. And I always think it is worth just sort of reevaluating where the worst case scenario can ultimately go, because there are opportunities to, if you can't make money, at least damage limitation with it. So there's a couple of things here. There's bear flags, there's similarities with the 2021 cycle, and then also just sort of major support, which we'll kind of have a look at. So what is this one I'm doing first? That's the question. I'm not entirely too sure. Okay, well, we'll start with people have. I didn't really see it until someone sent me a link for this, and people are actually saying there's a lot of similarities between 2021 and 2022. Sorry, and 2025. And I initially didn't see it, but I'll at least paint the picture for you, and then you can make that decision yourself. So what we have seen is we've seen an incredible rise up in 2021. I just mentioned that. We went from 10,000 to effectively 60,000 in a matter of months. Incredible move there. And then we had a bit of a topping pattern with an incredibly sharp drop off. Then we had a period of ranging before we picked ourselves back up and ultimately went on that next leg up, hit an all-time high. Then we moved down into a bear market. If you actually have a look at what we've experienced so far in 2025, back in 2024 as well, I suppose, an incredibly strong move up. So sub 50,000 to 110,000, period of ranging before we had a sharp drop off and a period of ranging at a low before we then saw us picking ourselves up, making another top, and then potentially starting to move back down. And actually, when you look at both of those, there's a lot of similarities there. And I can take those similarities a little bit further, because actually what we can see is on this move up, I'll zoom in, but on this move up, so this is 2021, we had the drop down over the summer, we had a move up, a pull back, and then a move back up, hit the top, pull back, bit of complacency, failed rally, and then a fall back down. We go into here. So what do we have? We had that moment of period, move up, pull back, move up to the top. So we've had that sharp move down, and then potentially what we're experiencing right now is the start of that complacency leg. And I'm not saying this is happening. Fractals are your own devil, because you can dive into them as much as you want to do to try and convince yourself of whichever narrative it is that you want to believe. But there is some similarities to that. And that's why I've not bothered pulling out percentages and sort of the price range. I'm just looking at it from a psychology point of view. Sort of like isn't it interesting that, markets are very similar in terms of sort of human emotions? That's ultimately what these candles represent, is fear and greed, human emotions within those in terms of how we buy and sell. And it doesn't matter what it is, we go through the same thing. That's why market makers make their buck. They know exactly how to trigger us. We'll stand fast first couple of times, third time we'll crumble. And ultimately we see that, a strong move up, greed, capitulation, fear, ranging, satisfies ourselves, we're happy again. This time it's going to go better. Yet we get better. We come back down. We've had this before. It will happen again. We start to build up. Everyone lows in, and then nuke, and then we can repeat that pattern again here. And so, it doesn't matter about the percentage range, doesn't matter about the actual price range, but there's certainly similarities in terms of human representation of their own psychology on these charts at the moment. So certainly something to at least consider, if nothing else. And if you might be easier, weekly charts probably fine. Maybe the monthly, just so you see it a bit better. So we're on the monthly linear time frame at the moment. I'm sure most of you have probably seen this one as well. And it's one of these things that you're like, yeah, that can't be true. I remember people drawing this trend line, back in 2021, all-time high of 2017, the April and the November highs of the 2021 market. Just a coincidence. You extend that one back out, and you know what we hit? We actually hit where we were through back end of September and October. So there's definitely something there. And each time we've hit it, we've generally rejected from that one. We've had that rejection now. Now, what we're all hoping is it's like this one. It's the first kind of rejection. And ultimately, we're going to range a little bit and then make that move up. We get to 150, 180,000, whatever it is. But there is an argument to be said that actually, if you zoom in, pretty darn close to hitting there. And I'm still up in the monthly. I'm sure you could tidy it up a little bit. I mean, we have had that range there. So I think it's just interesting that we can have a look at that. And if you want to try and have a think about, well, where can we actually go? Don't worry. Some positivity is coming, I promise you. But there are people now talking about a potential bear flag that is ultimately forming. It depends how you want to draw it. You can draw it on the linear or the logarithmic. The two articles there kind of use both. Doesn't really matter to me. But ultimately, we've had this move down. We're finding that price is effectively ranging here and here. And so what we would expect is if this is a bear flag, we don't know when, but a rough estimate is going to break out there. It would head back down. So on this price range, in and around about 74,000, which, you know what, it's kind of the bottom of where the market was from the tariffs back in April. If we throw it onto the logarithmic chart, just delete this again, zoom in so we can actually see it. We have that move from here down to here. We take it to wherever we think the break's going to be. We can only do it from here at the moment. And I actually thought it got into sort of 69,000. It doesn't. It gets to 70,000 dead. So, you know, there's certainly some things we had and have that conversation there. Now, as I said earlier, for me, that's not something I'm necessarily looking. I accept it. I completely accept that could happen. But right now, I'm still looking at, you know, we are at least at the moment not breaking that downtrend. Which is why 89,000 is so important to me, because if we kind of lose this last one, then, you know, we have to question whether or not we're breaking structure, and suddenly that move down is becoming a lot more sort of realistic. And if we do suddenly start to see that breakdown and we then lose 86 and then we then lose 84,000, you know, we have to prepare ourselves for where it's going. And I bring these up to you now because now you can have some levels in your mind and go, right, well, if we get below 89,000, maybe I want to take a little risk off the table. If it only gets down to 86 and we turn around, I can always put it back in when we get back to 89,000. If we get below 86,000, actually, you know what? We're getting pretty close to a bottom here, especially on a daily close or a weekly close. Might take a little bit more risk off the table. We lose 84,000, you might think, I've got to take the rest off the table. At least you now have an idea of where that's going. You've built in a laddered system to be able to get yourself back in, but you're prepared for where it may go on the downside. Don't need that one anymore. Just leave that. And then, you know, the reason I have to go back to ultimately where we are is this. And I, you know, those of you that have watched regularly, you know this line. 50 EMA or the weekly time frame. It is the go-to level for confirmation that we're in a bull or a bear market. We can accept some time. I've already extended out beyond what I should be comfortable with because I haven't seen that follow through. But normally I'm like a couple of weekly candle closes after we lose it, which should have been 2 weeks ago when we closed at 90,000. But since 90,000, we haven't really fallen away any further and we haven't really made that move. So I'm happy to just be skeptical rather than in full panic, but we are below it. And we don't normally stay below it unless we're in a bear market. And that level, it keeps on coming down now. We're at 99.5, something to ultimately consider there. But if I throw this on, which is the 20 and the 50 EMA, and you kind of have a look, we'll zoom out, these yellow crosses. Now, they're not here to say this is a perfect opportunity to get in, get out, but it kind of at least gives you a period of when the red and the green line cross, it gives you where the yellow crosses are. You can kind of see these sporadically sort of here. There's 4 of them there and there's 2 of them there. So there's only 3-4 occasions it's actually happened in the history of Bitcoin because we're on the weekly time frame, remember. But ultimately, when that 20 crosses through that 50, it happens when we're in a bear market, and we only really cross back out when we are in, historically, the beginning of a confirmed bull market. Similarly, I know it happened late in 2018, but when it did cross, we had that further move down, and we effectively spent the best part of 9 months, 10 months in a bear market. Obviously, we found the bottom and started to climb out, but it was 9, 10 months before we got back out of it again. Then we had some shenanigans in and around COVID. I would personally discount both of those, though they did technically happen. But we then look from 2022. Similarly, sort of same thing happened again. When it crossed, we were already in the bear market, but it was a good indication. In fact, it came just after the complacency rally. And then we spent, the next 6 months continuing to fall, and then about 3 months climbing out of it before we had that cross again, confirm that we're in a bull market. And the reason I mention it is we're getting pretty darn close again. If we were to extend out these lines, and this is an art form in itself, but if things kind of stay on the sort of the mean of where we are, mid-January, we might actually find out that they cross. And in the whole history of Bitcoin, whenever they have crossed, they've only ever crossed when we were in a confirmed bear market. So there's certainly some things that we have to pay attention to. We can't just put our head in the sand because we don't want that to happen. The best way we can play it is to just convince ourselves. You look at, I was going to say convince ourselves. Yeah, convince ourselves that we believe our opinion is right by testing it constantly with data sets that we don't want to be looking at. And that's kind of where I like to just find myself, particularly when we're near this top. And I don't know which side of it we're at, but the closer we get to it, the more we should be checking. Because even if we are on the left-hand side of this, these are blow-off tops typically, and they happen fast. And so, we can very quickly slip within this side here. So we just got to be cautious about it. Oh, I have it there. So where do I think we are? If I'm honest, I have to say we're here. I have to say we're on the right-hand side at the moment. Because, as my big one, the 50 EMA, we're below that. If we climb back above the 50 EMA, I reserve the right to move it to the left-hand side. We climb above it and stay above it. But until then, I kind of feel like I might be the only one thinking it, or at least voicing it. I kind of feel like we're on this side. And that's difficult because I'm not where I want to be. I'm happy with where I am, but I'm not where I want to be. And you always think you have a little bit more time. And if we are on that right-hand side, bloody hell, it's another 12 months until we get there. I've got a little bit of a pep talk if we get into a bear market, but I don't feel now is necessarily the right time. We still have an opportunity. The reason I put it here is I still think we've got an opportunity for that move up. Okay, that looks terrible on the white background, and that being the case, it may provide us with an exit. It's going to certainly help provide us solidify where we actually are. Next really strong rally from here, we get to 100, 105, 108,000, 109,000, shall we say, that big level we used to talk about. And we can't clear it, that might be a real good time to take some profit or to sidestep, however you want to look at it. I'll certainly be doing that. Okay, let's try and look on some lower time frames. Oh, actually, let's just see. Jordan, did you see the video? I didn't see that video about the ETH holder. I do want to have a look at it. My daughter's off sick at the moment, and it was my son's nativity today. So bit of time spent, family time, just sort of, managing those. So I haven't seen it yet. Important to know the 3% ETH holder is massively down on his buy, I believe. Okay. We say massively. Depending on when he bought, for the last 2 years, it's kind of been at the same range. But anyway, I've not seen the video. And if he bought before then, unless he bought, anyway, I'll leave it at that. We'll have a look. We'll check that one out later on. Where have we got that on? Just get rid of that for now. Don't need that on there. Go back to Bitcoin. He also released a silly price prediction too. Okay, I've not seen it. Casper had hundreds of halvings and it tanked like 8%. So I'm not sure, Bijan, how you got to make that comment, but some people have been commenting in Discord about the fact that BitTensor's mechanics are the same as Bitcoin's. Let's just be clear. BitTensors aren't the same. They copied Bitcoins. Yeah, that's the correct terminology. That's not a slight against them, but a lot of people have copied Bitcoin's tokenomics. A an integer of 21 number of tokens, normally 21 million, but could be higher or lower. They have that halving. They try and mirror the 4-year cycle because it has worked with Bitcoins. But for me, if you are talking about sort of what can happen with the halvings and sort of where we can go from that, I don't think BitTensor has the credibility that Bitcoin does at the moment. And because it doesn't, I just don't think it's going to play out like any of it. It can play out like Bitcoins. Of course it can. There's only actually 3 options. BitTensor's price goes up, it goes down, or it doesn't do anything. So it's actually a very good chance that it's going to mirror. You could call it game theory, the last 4 halvings, and try and see what the probability of is it marrying each of them. And I don't think it's going to be too outrageous. It'll probably be in the thousands just because you've got 3 opportunities to do 4 times. So yeah, anyway. I've lost what I was getting to there. But what I think I'm trying to say is it may happen to just do what Bitcoin did in each of the previous halvings. But that would probably just be luck rather than, it's because it follows Bitcoin's mechanics. I don't know if that's what you're talking about, because you mentioned Casper halvings, but it is there. Tom Lee, he has the BMNR, which is the ETH equivalent of the MicroStrategy or strategy. He's very reputable. Core Bitcoin 100K. Okay, there we go. And he's really cool. So I'm going to believe him. Fair enough. Absolutely fair enough. I will get around to watching it. But okay, let's have a look at Bitcoin. Let's have a quick drink as well. We've kind of talked about the weekly, so let's just, the 20 and the 50 on this one has actually cost. But anyway, daily time frame. Let's get to it. And this kind of adds to what I was certainly talking about on Friday, but kind of what I've been saying today. Strong move down. Okay, we can't avoid that's happened, but look what it hit. The 800 EMA daily time frame, strong level for Bitcoin. Hit it, bounced off it. And then, we've been beaten around the head for the last 2 months by the 10, the 20 EMA. And we've managed to get above it now. We've cleared above it. We've got 3 hours to go on this candle. I want to see a couple more. But I think there is room to run. We stay above that 20 EMA. The absolute 100% next logical level, I just can't see it staying above here and then we roll over. We'll go for that 50 EMA. We'll go for it because we've got vector zone to try and drag us up to there. We've got trap liquidity there. So, that could almost be a representation of a liquidation heat map as well. There's excessive volume from that previous candle. And it's the 50 EMA. It just seems that we will head towards that one. 97,000. Maybe we break through it. We go through the cloud. It's that 100K kind of battle. But for me, we stay above that 20 EMA today. Maybe we close above it tomorrow after the shenanigans that we see. We're going to go for it. Of course, that 50 EMA is going to be coming down for every day that we stay there. But I like the structure here. I do. I said that on Friday. And I stand by it because nothing's changed. Move down, move up, move down. Kind of a double bottom, the double bottom that I like to see. Move back up. You could almost say maybe it's a triple bottom now. I mean, it's not. It's just we're making higher lows each time. And we're just moving up. And within each of that, we've taken out some vector candles that we sort of made on that first move up. But this move, getting through there, being slow and steady. Daily time frame, natural volume, not leaving a wake behind us, a contrail, whatever you want to call it. And so we can move up. I'm going to say that if we want to actually break above and stay above the 50 EMA, we really kind of need to do it with a vector candle, because the previous time we hit it, end of October, we didn't have that sort of energy to get through there. But I really do feel, and I'll make sure that I save it, this seems to be an absolute, move for me. I think that is where we're ultimately going to go. And even if we just take sort of 50% of what's left, 98,000, wick through it. No guarantee we're going to get through it, but in terms of the short term, I think that's a target where we're going. I'll hit save now so I don't actually end up deleting it later. Drop on, what have I done there? Drop onto lower time frames, go down to the 4 hour. I will get rid of that drawing now, but I won't hit save, so don't worry. And we can kind of see. So again, Friday, I kind of talked about, brilliant. Where's Friday? We came shooting down through with the red vectors. But actually over the weekend, green vectors gobbled that one back up. We've been having a bit of fun in and around it, but you can have a look. We spent yesterday look at the wicks and the candle bodies, just the 10, the 20 and the 50, just all crammed together. You kind of knew we needed something to spur us through that. Strong green vector candle lunchtime today. And it did feel overextended. I'll show you on the hourly as well. Moved back up and we flew through it, but then we just hit the 200 EMA 4-hour time frame and we've rejected from that. And this is kind of the time where we have, we say to ourselves, okay, we made that strong move up. Next couple of hours, as in a couple of candles, maybe we do take a move back down to this 50% line, start to eat back into this, because this was a strong move. We'll leave that there for when we go on the 1 hour. And then we sort of see that volatility pre-FOMC, move up, move back down tomorrow, get everyone really confused. We have some real shenanigans at the announcement for FOMC. And then from the other side of that one, we sort of have that move going through. And again, strong level, 200 EMA. So I'd like to see a vector through it. And then that liquidity zone, it's just behind it. Oh, well, this one's actually at 96,000 because we're on the wrong candle. It's this one up here is the one that we're looking for, isn't it? Apologies. I should have zoomed out a little bit. That's the one that I drew on the other time frame. But yeah, again, just looking at that structure, there's nothing wrong with that. I suppose an argument can kind of be made somewhere for, I don't even know how to draw this. I was trying to do sort of a rising compression. I don't think I can draw it perfectly, but you can kind of get the impression that let's get rid of this. I'll start it again. That's frustrating, but I'm gonna have to get rid of some of these. Just a second. Get rid of that. That'll do. You'll be able to see it from now. Sort of there's something there, I suppose, and there's some sort of level kind of here. It's not the best drawn. I appreciate because it dropped down there, but there's an argument to be made that, well, wait a second, we're in a falling market, a rising compression. That could quite easily happen. Absolutely. You can't ignore that one. That's kind of the bear flag scenario that we talked about. But I still think there's a move to be had there, especially with the volatility we'll see tomorrow. I mean, the markets hate the decision. We don't get a rate cut, then yeah, okay. We can see that going down. After some volatility, we can see that going down. I'm just going to keep pressing back until I get back to where those were. Thank you. So we get to go on to the 1 hour, just very quickly. You can actually see that this move up, it was actually over 2 hours. And I bet if I went down to the 30-minute, yeah, it's still over 2 hours, fine, okay. So it was over 2 hours, straight out of the the US markets opening. But you can just suddenly see we went from 90,000 to $4,500 in 2 hours. That's a lot. That's 5% for Bitcoin. We were obviously going to find some 800 EMA. That's naturally going to be occur there because we're 1 hour instead of a 4 hour, 200 EMA. And we can kind of see that rejection. And this candle is, I mean, what we've seen today, or sorry, this last hour, it's totally taken out this vector candle. And I have to say, I don't see why this can't eat into here, even if it's just the 50% as that's drawn and taken that move there. So that's kind of where I'd be looking and seeing that. But go back onto the 4, clear these away, have a look out, just make sure I'm not missing anything. Yeah, I don't mind it, to be honest. I hate it when I do that. The 800's up here, that's going to be moving down, this time next week. It's down at sort of that 100K level, which is maybe a battleground. But you can kind of see that 100K level horizontal from here, tying with some vectors as well. I think there's plenty to go off. And if you really wanted to, really over analyze where things are, we can throw a fib on. What should we do? Body. The body's not bad in terms of levels here. Not so much in terms of Bitcoin done there, but maybe if we do wick to wicks, it's such a long one. Certainly some interaction there, and these levels are tying in with ones. I suppose that's probably a little bit better. Certainly paints that narrative. And it also kind of shows that 89,000, which we want to stay above, is also a fib level that we could, correct that down to. But 95.5, starting in the golden zone, and the 0.5 at 100K would be interesting. Right, let's onto the daily. Let's put these back on and let's get talking about our favorite, big sensor. Sorry, just before I do, Reese, with regards to our current position in the cycle, it's a limited data set, and if anything, cycle theory suggests that some kind of divergence before the cycle is due. I absolutely agree. With the 4-year Bitcoin cycle, that could well and truly be broken. But I've said this before. Every cycle we get people saying this time it's different, and there is a massive argument to suggest that this is different. But we're so close to the end, we might as well just wait to see. And I think with the right, I think I'm the right side of it. I am cautious, but still in the market. So, unless I see a real sharp move to the downside, I'll stay that cautionary side, and hopefully get to ride it a little bit higher. But I'm certainly trying to protect myself as best as I can. You'll see my portfolio in a minute. It is just 2 items, well, 3 if you include Tether. And I feel most comfortable about that one. But no, I do get what you're saying. John, even though I'm relatively new to RT and trading, I can see a possibility for a better strategy for now is sidestepping the market rather than investing in subnets to acquire more time. Look, I've seen a lot of the comments on Discord, subnet thread and general thread about sort of how things are going with Alpha. And I read them all. I just generally try not to. I don't want to comment because I kind of feel at the moment there's maybe a little bit of a I told you so, and I don't mean it that way. But for me, Alpha tokens are always a very high risk, highly speculative asset class, very new. And I've learned from it the hard way. I really have. Low liquidity assets I've been in, and it burns. And unfortunately, for those that are struggling to make it work, you'll now know. You'll now know next cycle whether or not you feel the desire to do that again. And perhaps you can't really understand that until you've had it done to you. But I don't feel any pains of missing out. I really don't. I feel very comfortable in the positions that I'm in. And look, if Alpha does what it's going to do, everybody's net worth is going to absolutely knock the crap out of what mine will be. And that's fine. That's the risk that I ultimately end up taking. But I'm happy with sort of how that risk is balanced for me, because it is difficult. And whilst I don't necessarily look at any of the charts, so when people say I'm down today, I don't really appreciate what the charts have done and the levels of volatility there. But it is difficult. And I just hope that, one, I hope you actually all make it out of it. That's what I really hope. But you're able to have a serious reflection about whether or not it was the right strategy for yourself. And unfortunately, sometimes that's where it goes. Apologies, Reese. I kind of get it now. Open to all eventualities, I think, is the right. It's kind of the right way to do it. And there's no problem. Many times people in the group have sort of said, write your opinions in sand, not in stone. Constantly revisit them. It's absolutely fine to do that. There's this sort of attitude that if you put your voice out, you have to be right 100% of the time, otherwise you're a failure. A good trader can lose more than 50% of the time and still come out on top. So it's absolutely fine to have an opinion and it not to be right. Just when it's not right, it's like a trade going in the wrong way. Learn from it and make a decision about it. Don't just stick your head in the sand and say it'll be 12K before you know it. But anyway, okay. Right, bit sensor. I'll get rid of. I'll keep the Gandalf line. We'll just have a look at where we are here. And again, if you weren't on Friday's call, what I see with BitTensor is ever so nuanced, different to Bitcoin, which gives me a little bit more uneasiness. Now, today and yesterday's price action have helped alleviate some of that. Of course, they have. But what I was seeing prior to this was, we had falling, and we had the 10 EMA controlling the descent, very similar to what I said on Bitcoin daily time frame. But what we had down at the bottom is we hadn't had higher lows. Matter of fact, we had lower lows, and that was an area of concern as to where that was ultimately leading. Now, what we've now seen is we haven't quite seen a higher low yet. I mean, you could argue that is, I suppose, on the 4 hour, it's certainly going to look like it. But what we've seen is we've seen a sharp move up from BitTensor, but then we've seen it hit this 315 Gandalf line that we sort of talked about. You know, we try and line that up a little bit better, and you zoom out, you realize how important that 315 level is. You know, we've got interactions here, all of that, up and below the line, and then here. It's a powerful one. It's a monster of a level to get through, and the fact that we're below it, and you know, we've rejected from it fairly convincingly today, kind of just makes me feel that we've had that nice rally up there, but it is turning into a bit of a failed rally. What I would say is we have stayed above, or we currently are still above the 10 EMA, and we are also technically above the 20 EMA on the daily time frame. So there's certainly something to work with there. But I'm not getting too nervous or upset until we breach through this level. And you know, sadly, then the big boys come in. It's the 50 and the 200, which are not that much further ahead. You know, we're talking below 130, so within the next $30, so 10% of BitTensor's price action. We've got Gandalf, the 800, and the 50 EMA. So there's plenty of things that are there. So what we need, and what you can see from this chart that is missing on a daily time frame, is a green vector candle. Hell, I'll take a blue. Just some increased volume in the last. I have to get a date range up. In the last 31 days, in the last month, we've had one vector candle on the daily time frame. So it's not like there's that much extreme interest in BitTensor at the moment. I think it's probably a fair reflection on altcoins as a whole, but we do need to get that, certainly to give us that impetus on the way up. But right now, all I'm really seeing is we're just in a range that we've actually been in for the best part of 2 or 3 weeks, and so we're sitting there. And I'll be honest, interesting story, I suppose. As I said, my daughter was ill. I ended up actually having to sleep on her floor last night because she's been ill quite a lot. And about 4 a.m. I woke up to help her out. She went back to sleep, and my absolute hatred of the Philadelphia Eagles, because I'm a Dallas Cowboys fan, they were playing at 4 a.m. UK time. So I thought I'd check what the score was. They were going into overtime. So the game actually went on till 5 a.m. So I was up, and of course you can't be awake and not check on the charts. And BitTensor was down at like 290, and I almost bought back in because, you know, when we got on some lower time frames, it seemed like that was a good level. It had bounced off in around this 50 EMA. I held off it in the end, and I was cursing myself earlier on today because we were back up at 315, but I was kind of waiting for that level to see, and I cursed myself because I should have bought and then had an opportunity to sidestep. But you know, I actually was at the charts at my PC. I would have been able to have made a trade, but I just decided not to do it in the end, and it's kind of maybe coming back in my favor at the moment. But you know, you ultimately can't win them all. Now, what we did talk about on Friday, now that I've finished rabbiting on, might be better looking at this on the 4-hour time frame, was a potential inverted head and shoulders. You can kind of see it here, and it's an ugly one. It's Quasimodo, I'll be honest with you, a bit of a hunchback, but we have got a left shoulder, if you will, a head a bit lower, and then kind of an action here of that right shoulder. It's not the cleanest, and what I was kind of saying on Friday was I want to see this out a little bit, for maybe not that far, but I would prefer to see the shoulder there so that we had some sort of mirror to it. It doesn't require a mirror to happen, of course it doesn't, but you know, you just want it to look a little bit better. And if you do use that, then ultimately you can either have a neckline here, and actually we've broken through it, we're retesting, and we're about to make that move. So definitely, although I would suggest we need a vector candle to get through this. Or you could say, actually, it's more like, if I can find a horizontal line. Say maybe that. Oh, what is it with my colors? I don't know what I've set out here. More like that. And we haven't quite closed it off yet. So there's 2 ways of absolutely skinning that. I don't know which one I'm going to class as the correct way, but there is potential. Absolutely, there is potential there, and you know, I don't think that can be ruled out. And as I said, you know, 4 o'clock this morning, we're down here, and I'm thinking, should I really play this? Are we actually forming that right shoulder? I decided to hold off it. I think I probably should have done in hindsight, Maybe I'll just convince myself I've saved my accountant a little bit of work there. But now that we've actually sort of coming back down, I will have a look at how we interact in and around that 290 level, back at this 50 EMA 4-hour time frame. We get back into that, and we sort of don't clear it. I think that it's worth, even if it's for the short term, getting back in. I got out at 310, so I think there's a $20 uplift there to maybe sort of have a little play and a ride with. But there's something to be said with it. But I do sadly think, go back on the daily and get rid of all of this. But right now, we had that movement, but you take that out, and actually all that BitTense has done for 12 months is continue to form lower highs and lower lows. We had one move above it. So look, this was December. I'm going to try and draw the best line I can here. It's not going to touch everything, but I'll tell you what, let's just get rid of that and that and that. Don't need any of it on. I'll do it on the weekly so you can make these candles a little bit bigger. But that's what we've done. I mean, we had 4 weeks where we were above it. Didn't last long, but we did. But you take that a little bit out, and that was an abnormality. That went against the market. That's kind of what we've done. We've just constantly fallen for 12 months. And so, I got to say that whatever we do between this price and 350, I'm not really that interested. I mean, I'm interested, of course, but I'm not excited until we get through there. And let's face it, none of us are really excited until we at least get back to 500. I mean, most people in the group were expecting significantly higher prices for BitTensor by now. And it's just not been where it's been. And that's been difficult for people. And I think that's probably why we're getting some of the reactions we're getting. But until we see, these breaks, there's so many levels when we do put these back on, although they're weekly now. That's not going to help. But even on the weekly, 350, we've still got to get through the 10, the 20, and the 50 EMA to get to that level that I want to be at to break through that downtrend that we've had for the last 12 months. So it's a lot of work, a huge amount of work for BitTensor to do. It's proven itself that it can do it. Absolutely. But we need to do it again. And this would have been fine if we then hadn't gone and made a new low. And it's making that new low, which for me kind of negates that, because we're just continuing. Oops, that was not very well drawn. With that and ultimately with that. So you could almost cross out that. It's like doing equations, isn't it? Well, the powers, I'll cross each of those out either side of the equal sign. So they balance each other out, and that's the mean. Sorry, if none of you do that much maths, I would have bamboozled time, absolutely, for that analogy. Anyway, I'm kind of conscious of where we are. So let's just go through lower time frame, try and see what we can get to, and then we'll go from there. Maybe a quick look at some of the others. From a 4-hour point of view, we are the right side of the 50 EMA. So fine, we did vector candle through it. Fine, perfect, what we want to see. Came back down, retested it. We're just squeezing through this 200 EMA. We've got to break through it. I don't mind if we end up coming back down to 290. I'll take the cloud. Let's just say get down to 285, whatever. But we've got to come back through, and when we do, we've got to take it with a vector. Get through this, and then 350, we can see 800 EMA. There are things here as the target. But we know, unfortunately, that BitTensor just wipes out all vector candles in its range. And so, sadly, there's that there. There is that there. And until we get above that 800 yellow EMA here, I think that has to be considered. I don't want it to be considered, but it has to. We can't ignore it. And I think that baseline sort of down at here, because we've already gone 50% into it, would be something that I'd have to look at. That's 260. It's a low level. But I think it's something we need to consider. Zcash, I'll tell you it's not funny, I can assure you. A Zcash story for me. Sunday night, I don't know when it was, but I did a short. It must have been on the day. This isn't a daily. Oh, no. Can't remember what time frame it was on. But I saw a short opportunity. I put it in at like 2:30. It was like 3:30, 3:40 kind of level, and I went to bed. And I didn't put a liquidation, a stop loss on it, And so yeah, 11 o'clock at night Sunday, around about this level I went in. My daughter was sick, so I actually slept in because I kept on getting up through the night to help her. I got up about 10 a.m. So by the time I got to have a look at my charts, it was 400, completely liquidated, lost the entire position. It's part and parcel for the course, unfortunately. But Zcash has actually had a bit of an awakening. 20% growth yesterday, 5% today, still doing quite well despite a pullback. It does feel it's a bit overextended, but you know, Zcash did that overextension, and ultimately it has come back down. And for those of you that are trading it, there's an argument to be had here. So if we go on to the weekly first, strong move up. Oh, I've not got these on, that's why. It's going to make a bit more sense. It's come back down, retested the 20 EMA, come and bounce from it. Fine. Daily. Oh, interesting. I thought that'd come to 200. Yeah, I hadn't ignored that there. But what we can see is it's, maybe that's what I was looking at, was the 800, is it's come back down to the 8 EMA, back into sort of this range here where we saw sort of a decent level of momentum come from it. We formed that double bottom, and at the moment, it actually is moving up in a very positive direction. And when we zoom in and have a look at some of the colors of these candles, it's what you want to see, you know, nice double bottom. Okay, it's a bit above the 800 EMA, but it's a good double bottom there, nice structure. Vector candles through it. We vector candled into the 800 EMA this afternoon. We're starting to pull back, but we are, you know, we're decent side through there. Maybe we get a bit of a pullback here, but it actually looks like it's starting to move back up again. And I do say if and when Bitcoin turns its corner, I think Zcash is going to carry on with what it was doing pre the collapse. And so it could be another good one. Either you want to get in on it as a spot or something that I do, which is trade it. Don't do what I do and forget to put a stop loss in. You know, what is it? I'm only going to sleep for 9 hours. It'll be fine. No, it's not. This thing can actually move. And it's a decent side trade as well. So it wasn't the smartest thing I've ever done. But I do have to say, you know, like nobody likes to lose money. We had that conversation in Discord before I went live. But I take the trading side of it as it's par for the course. You know, it swings and roundabouts. You can't win 20 out of 20. You know, you can still make money when you win 7 out of 20. And that one was a big loss. That, because there was no stop loss, that's going to take a couple of trades just to get it back to net even. Never mind anything after that one. But I've got to be mindful not to revenge trade it. So that's something that I will bear in mind on that. In terms of some of the others, so let's just go through a few. Ethereum. So again, Friday, we were happy with what Ethereum looked like. It looked very similar to Bitcoin, some to higher highs and higher lows. It's had a strong move. I will give it its credit there. It's had that move that we wanted it to see get through, but we're at that 50 EMA now. So we've got through the 20s, which we needed. We're at that 50 EMA. It's not a vector candle on the daily, but we've still got 2 and a bit hours to go. We haven't actually rejected off it. We're just at it right now. So not the worst place to be, but we still need a bit more momentum from that one. In terms of down on the 4 hour, vector candle through it back on Sunday, and then we've seen some movement here. Unfortunately, there's plenty of reasons for it to go up and down just in terms of vectors, but also retracements. You know, we could go up, take out this vector candle here, we've got 800 EMA, find a bounce from that or a rejection from that, or we come back down and find some sort of support after taking out these vectors on the 10, the 20, the 50, or the 800 EMA. So there's plenty of sort of movement around there, but you know, it's only 6% on the day, but a good strong move from it. You know, I'm not particularly a big fan of Ethereum this cycle, but it's at least showing the same kind of pattern that we saw with Bitcoin. And when we went through some of the other ones, that wasn't necessarily the same, but things like Link, you know, double bottom now, movement up, starting to see a decent move. Okay, I'll give it its dues there. It's looking better than what it did on Friday, because we did talk about this having that second bottom slightly lower than the first. I mean, I don't know why I still keep these, I don't have them anymore. I mean, it's fine. That's sort of best of the word I can use. Solana, up to the 800. Solana's been a bit of an interesting one because obviously it was such a golden child, but now actually kind of just ranging. That's like more of a bull flag than most of the other ones. Urjan's put, I'm away from the laptop tomorrow afternoon, evening, so I may put a buy order in before midday tomorrow and just see how the chart looks by then. I don't think that's the worst way to play it. Be careful if it's a perp trade. If it's a spot trade, fine, because the volatility might get you tomorrow. But some of the others should be all right. XRP, for those of you that are interested in this thing, I mean, this is actually on the 4 hour, still in that downtrend. Okay, it's making the similar moves to what Bitcoin's done, but This is a lot closer to its 800 EMA than a lot of the other ones are, and it has been knocked down a fair bit. But it's not really near the 50 at the moment. Still a bit of room to go. This could get to 226 daily. It's kind of just ranging sideways and down. Not the best place for it to be. Like, so here, another example then. With Bitcoin, we were doing that, higher highs and higher lows. This is just higher lows. Everything else is flat. And so it's kind of like you look at it first glance and say, that's not doing too bad, but actually there's something there at the top, which is just not giving it the freedom that Bitcoin has. And as I say, you can see those moves a lot clearer on that. Kind of conscious of the time, so I'm just skipping through a little bit here. Anything there? I mean, Nasdaq nearly back at all-time highs. S&P didn't quite make it to its all-time high close yesterday, and we're starting to see it just sort of roll over a little bit. Russell, for those of you that are, the Russell 2000 or the Russell 2K, all-time highs. People believe this is an indicator of what altcoins should be like. Well, we're starting to see new territory. Maybe we're going to see that, similar kind of movement into altcoins. Although I still stand by, there's something off between other risk-on markets and the crypto market at the moment. These recoveries are far better than what we've seen with Bitcoin. Gold there, silver. I didn't even know it's silver. $60. I sold 50% of my silver at $25. It stings. I did say I'd sell the rest at 50, but hey, do what I say, not what I do. And I didn't sell it. So at least there's something there. But $60, wow, it's had a hell of a move today. I didn't notice that one. So looking good. And then some of these other ones, I don't think there's really anything major to talk about on any of them. So I won't. I think that's probably it. Oh, actually, just one final thing that I was looking at was Tau BTC. Because actually, earlier on today when I looked at it, this candle was like this. It was a lot thicker. And I was like, you know what? If we can close above this couple of candles, I was actually thinking about selling BTC into Tau. Just having a little short-term play there. But it hasn't. It's been rejected now. So that's glad I didn't action on it. But it's certainly something to have a look at. And just for those that are curious, it's looking fairly simple these days. This actually isn't right. So actually, that should be 50-50. The amount of Tau that I sold was a representation of 40% of my pot. I've sold every bit of Tau I own. So that is separate. The other USDT is what I'm perp trading with. And every so often, I'm just carving out profit and I'm buying BitTensor and BTC with it. Some of it I bought 108,000. Some of it I managed to buy at 86,000. That's where the balance kind of lies. But it's pretty much 50-50 at the moment. 50 USDT, 50 BTC for the personal side. But know that Tau can be bought back at any moment. And yeah, it might become like 42% or some 41% just when I actually do the correct figures. But that's where that one sits. All other assets are being sold. That was what I was just trying to show from here. And the business side is still 100% BTC. So, and I haven't sold any of that yet either. I think that's probably it for now. I've lost all my feeds. There we go. Good. In terms of, can we get that Christmas miracle run up to 100,000 before Christmas? Absolutely. We are not that far off. We're $7,000 away from 100K. That is positive news tomorrow and a little bit of hype for a couple of days. We can get there. Whether or not we can stay above it, that's another question. But it's absolutely doable. I think, we've moved from 80,000 to 94,000 in a matter of weeks. We've still got a couple of weeks to go. To do half of that again is completely there. And I think there are certainly fundamentals that can get us there. I think there's some technical side of things that can get us there. But as always, unfortunately, with TA, there is a way that you can look at some things negatively with the bear flags and similarities and all that. So it's always about just being cautious about where you're going, sort of how you're sort of playing those things. And I will continue to reiterate that. And I actually want it almost to get to a point where you just say, shut up, Harry. I'm sick to death of you, trying to convince me we're in a bear market. If I can just keep on making you have those thoughts and you can still say, no, I don't believe you, Harry, then that's fine. It's absolutely fine. And I'm still doing it as well. As I say, I haven't sold Tau because I think we're in a bear market. I just saw a sidestep opportunity. And I'm happy to keep just playing that risk that way there. Trading Pub on Thursday, as always. There will be a live charting on Friday. I think it's my kids break up at lunchtime for Christmas on Friday. So I will probably end up doing it about 9:30 in the morning on Friday. So it'll be a bit of an early one. Of course, it's accessible all day. But we will have a nice, understanding of how, tomorrow plays out. Don't forget, though, and I deliberately not talked about it today, we'll talk about it next week. There's talks about Japan raising their interest rates, and that could have undo a lot of work. We'll go into that in a little bit more detail next week. Enjoy the rest of your evening. Trade safe. You got any questions, as always, hit me up on Discord. You got any concerns, feel free to DM me. I'll try and help out where I can. And other than that, enjoy your evening, and I'll speak to you all soon. Cheers now.